Hello, welcome to IG's Trading the Markets. I'm Angeline Ong, and I'm joined by Chris Versace, CIO of Tematica, to talk about a huge thing that's just happened in the streaming space. After a lot of talk about this, Reliance and Disney have agreed to merge their India media assets, creating an $8.5 billion powerhouse. Chris, it's a really big deal that we've been anticipating for a really long time. I mean, this is really a bigger story about how competitive the space is, right?
I totally agree. I mean, there's no shortage of streaming services, not only for companies like Netflix that eventually started that way, but the appification of video has really led to a tremendous explosion in the number of services that are out there. Arguably, I would say that there are too many, and that this Disney deal, I think, is a warning shot that we will start to see more consolidation. It has to happen. These companies are struggling with not only winning subscribers, but delivering top and bottom line growth, all while they have to continue to deliver fresh content to keep feeding the subscriber machine. It's a daunting challenge. And candidly, Angeline, I am not surprised at all that almost every major streaming platform is embracing advertising as another revenue source.
Now, Chris, this is a really crowded space, and Reliance and Disney arguably are late to the party. I mean, we've already seen rivals like Sony trying to do the same thing. India's Z Entertainment and Netflix also formidable rivals in that space. Are we going to see perhaps more of this happening in Europe and the United States?
I do think we're going to see more consolidation happen. It has to, candidly. There's just too many choices. And I also think that consumers are starting to push back by, simply tallying up the dollars they're paying for these streaming services. You have to remember that originally when these services came out, they were far less expensive than they are today. But as the competitive costs have risen, as the need to drive all that content I mentioned, we've seen those price increases. And again, this embracing of the advertising business model. The funny thing is when you tend to think around most consumer products, consumer services, the market share tends to settle in around 3, maybe 4 players. And if you think of how many we have today, it argues in favor of that consolidation happening.
Now, just switching gear, because it's also a big week this week for data, especially in the US, and everyone's waiting on this PCE. Big talk this side of the pond about recalibration of the timing of the first Fed rate cut. Do you think it's going to be such a big number, or is it just a storm in a teacup?
So I agree that I think we're going to see further pushback on the timing for the first Fed rate cut. If you look at the CME FedWatch tool, it's slipped from March to May, and now it looks to be June. But if you look at the margins of probabilities, the potential for a rate cut in June isn't that much higher than leaving rates unchanged following that June meeting. So I do think the market is going to chew through a lot of data in the near term as it rethinks the potential slippage into the third quarter for the first rate cut. But here's the thing, Angeline, while I do think the January core PCE number will be interesting, I think folks will really focus more on the inflation comments that we find in the February manufacturing PMI out Friday and next week's February services PMIs. And I say this because if you've paid attention to that flash data or the final PMI data over the last few months, it really telegraphed what we saw unfold in core CPI, core PPI, and both of those reports will be out ahead of the Fed's March 20 meeting.
Given what we know so far, do you think we are firmly in this soft landing territory, or do you think there's a risk still that we might not get a not too hot, not too cold economy?
Well, I tend to come at it a little bit differently. I'd say, what are the probabilities of a soft landing versus the probabilities of something more dire? And based on the data that we've seen of late, it appears that the soft landing has the far greater probability. We'll have to continue to monitor the data. That's why when we get these February manufacturing and services PMIs, the new order insights will be key for me And if they're positive, i.e. showing continued upturn in those parts of the economy, it'll reinforce the soft landing narrative.
Right, thank you very much. We have to leave it there. Chris Versace from Tematica with us on IGTV's Trading the Markets. This is IGTV.